Do you want to trade like a professional and finally stop guessing where the market is going? Imagine having just three powerful tools on your chart. The same tools that professional stock traders use every single day to spot high probability trades and avoid costly mistakes. Most beginners are completely blind. They either overload their charts with 20 indicators or trade without any plan at all. The result? They end up gambling, not trading. In this video, I'll show you the top three indicators that every successful trader uses: EMA, RSI, and MACD. But I'm not just going to explain how they work. I'll show you how to combine them into a deadly accurate trading system that can increase your win rate and filter out bad trades. And here's the twist. If you stick with me until the end, I'll reveal a special EMA and RSI trick that changed the way I trade forever. It's simple, but extremely powerful. Trading isn't about having a crystal ball. It's about reading the story that the market is telling you. Indicators are like glasses. They bring clarity to the chaos. Without them, you're blind to the patterns. With the right ones, you can spot the setups that 90% of traders completely miss. Most beginners fail because they clutter their charts with random tools they don't understand. The truth is, the best traders in the world focus on just a few indicators and master them. Today, I'll break down three of the most powerful indicators: EMA for trend direction, RSI for momentum, and MACD for confirmation. Let's start with EMA, the exponential moving average. Imagine this. You're looking at Tesla's stock chart after earnings. The price is all over the place. Big green candles followed by sudden red drops. It's hard to tell if the stock is actually going up or if it's just noise. That's where EMA becomes your guide. The EMA smooths out the price and highlights the true direction of the trend. Unlike a simple moving average, SMA, EMA reacts faster to price changes because it gives more weight to recent prices. For swing trading, one of the most powerful setups is the EMA 50 versus EMA 200 crossover. When the EMA 50 crosses above EMA 200, that's the golden cross, a sign that momentum is turning bullish. When EMA 50 crosses below EMA 200, you have the death cross, a signal that sellers are in control. But what if you're trading short-term moves? That's where EMA 9 and EMA 21 come in. These shorter EMAs help you spot quick price swings. Example, let's say you're watching Apple's 15-minute chart. Price pulls back during an uptrend and touches EMA 9 before bouncing. That's often the perfect moment for a quick entry because you're trading in line with momentum. The key lesson: EMA doesn't predict where price will go, but it filters out the noise and shows you whether you should be looking for buys or sells. Trading with the trend instead of against it is like swimming with the current. It's easier, faster, and far less stressful. Next, we have RSI, the Relative Strength Index. Imagine you're looking at Microsoft stock, and it's been climbing for 10 days straight. Everyone on Twitter is shouting, "Buy now, it's going to the moon." But your RSI indicator flashes 75, telling you the stock might be overbought. This is the kind of insight that can save you from entering too late and getting burned. RSI measures how fast and how far the price has moved, basically telling you if the market is overbought or oversold. Above 70 equals overbought. Price has gone up too fast and could soon pull back. Below 30 equals oversold. Price has fallen too hard and might bounce back. But here's the mistake I see all the time. New traders think, oh, RSI is above 70, I'll short, or RSI is below 30, I'll buy. That's wrong. In a strong trend, RSI can stay above 70 or below 30 for weeks. So, how do you use RSI like a pro? Combine it with support and resistance. If RSI is below 30 and price is sitting at a major support level, that's a strong potential buy signal. If RSI is above 70 and price is at resistance, that's when you prepare for a sell or take profit. Example: suppose the S&P 500 drops for several days, RSI hits 28, and the price is bouncing off a long-term support level. That's often when experienced traders start looking for entries, while beginners are still panicking and selling. RSI by itself is good. RSI with key price levels, that's where the magic happens. Finally, we have MACD, Moving Average Convergence Divergence. If EMA tells you the trend and RSI tells you momentum, MACD is like a confirmation tool that combines both. MACD consists of two lines, the MACD line and the signal line, plus a histogram. When the MACD line crosses above the signal line, that's often a bullish momentum shift. When it crosses below, it signals a bearish shift. The histogram shows the strength of that momentum. If the bars are growing upward, bullish momentum is building. If the bars are shrinking or turning negative, bearish pressure is taking over. Example scenario: imagine Tesla stock is trending up. EMA 9 greater than EMA 21, trend up. RSI is at 40, indicating potential for upward movement. And MACD just had a bullish crossover. That's like getting 3 confirmations to enter the trade. Pro tip: don't rely on MACD alone. Use it as the final green light once EMA and RSI agree. Think of it as the yes signal before pressing the buy button. Now, here's where everything comes together, combining EMA, RSI, and MACD into a single, simple strategy. Step 1. Use EMA to find the trend direction. If EMA 50 is greater than EMA 200, look for buys. If it's below, focus on sells. Step 2. Use RSI to pinpoint entry zones. Wait for overbought or oversold levels at strong support or resistance. Step 3. Use MACD for final confirmation. If all 3 indicators align, you've got a high probability setup. This 3-step system acts like a filter, removing 80% of bad trades and leaving you with only the trades worth taking. Example: trade. Let's say Apple stock is in an uptrend. EMA confirms it. RSI drops to 35 near a support level, and MACD just turns bullish. That's when you take the trade, not because of one indicator, but because all 3 are telling you the same story. Before we wrap up, let me warn you about the 3 mistakes I see beginners make with indicators. Overloading charts with 10+ indicators. It only causes confusion. Ignoring risk management. No indicator will save you if you risk too much. Chasing signals without confirmation. You need alignment between indicators, not just one flashy signal. Trading is about patience and consistency, not constant action. Now I want to hear from you. Which of these 3 indicators do you use the most and why? Drop your answer in the comments. I personally respond to everyone. If this video gave you value, smash the like button, subscribe, and hit the notification bell. And don't miss my next video, where I'll reveal my secret EMA and RSI strategy that I use every week to find high probability stock setups. Click the video on your screen now. Let's keep learning together.